Hey, it's Mack with PriceActionTradingSystem.com, and it is Wednesday. It's July 13th. This will be our chart lesson for the day, and just a range day today. We spent most of the day within the overnight highs and lows. Here's the overnight lows. Well, for whatever reason, we had an audio problem today. The whole video recorded, but the audio just dropped out after just a second there, and there's no audio whatsoever. And unfortunately, I do not have time to go back and talk about these trades all over again. So I just deleted everything from where the audio dropped. You can see the screen here. It is a range day. You got your overnight highs, your overnight lows, and we spent the majority of the day. Your midline is this dotted line. We had one failed break lower, and we ended up closing basically unchanged for the day. Maybe, I think, a quarter. Closed here yesterday, closed right here today. I think there's a quarter difference, quarter a point difference. So not much change. But what I'm going to do is I'm just going to point out each of these trades and describe it real quick. I'm not going back through this whole video again. I apologize. I hope I have it resolved and there's no more audio issues. And we'll see how this video goes. But it looks like it's all working properly. But I won't really know for certain until I stop the video and listen to it. But first trade, we had the break, new high. Look how far we are away from the EMA. How bearish that bar is, and it's pretty much a measured move. There's your first leg up. There's your second. It's a perfect measured move. That far away from there, take that trade. There's a failed second entry long right here. I made it green because it is right back into that those highs, overnight highs right there. And that turns out that's kind of where the midpoint is. But that's not a great signal bar either. But it is a trap. So, but it's so far down, so it's a little bit away from the EMA. So for that reason, I made it green. It's not a great trade. But we do get a break here. Notice there's a new low, pullback first entry, pullback second entry. But this is more of a little trading range. And this is a failed break higher. And at this point, you figure prices are probably going to here. They don't, but it's still a quick, easy trade. We bounce here. These two trades are right into the crude oil news, which has not been a big deal lately. But you still got to be concerned about it. So you may not have taken this trade if you're thinking about the crude oil news. But notice this little trend line working up. We've had a close outside a new low. Now we got one going up. We get a break. It's two legs down. It's a second entry long. Nice bullish reversal bar. Take that one. Quick, easy, no-brainer. It turns back down here. The reason this one's green, this would have been a great setup because we're looking for a new low, but the bar is huge. So you probably want to skip that one, but it still meets our criteria other than the 2-point rule, so I marked it green. Then we're just kind of going sideways, but notice what happens. By the time it pulls this double test rule right here, you can tell this is a trading range, and this is a bounce off the low side, a nice bullish bar. You're just looking to get back to the other side, and maybe it keeps going, but you're just looking to get back to the other side. Quick, easy move. Then notice that you get a double test here of this area. Big bearish bar. It never really breaks lower. You get more of an inside bar, so you might have hesitated on that one, but I still marked it green because it still fits our rules. But you were better to wait here when it comes back and gives that double test of that area. And that big bearish bar, just go short right there. Quick, easy move, pulls back, confirms that trend line, gives you another short. But I like the bounce here because it's right off that support area again. And this is a trading range, you can see. And so the odds are it may be going to the other side. Of course, when it doesn't hit this trend line, you want to go short, but it's still a quick, easy scalp there. Then it pulls back, it tests that trend line again, and this is kind of a little breakout pullback short from that area, and you're looking for prices to come to here. And again, this is another little bar stacked up, and it's that little failed break higher. You probably want to wait on this bar let it break lower and drop a limit order back here, and it would have come back and filled you, but you could still use a stop here. Uh, but it's just a really huge bar. So again, I'd probably wait on it to break and then come back. But look how bearish that bar is, and there's still room to get out here. Just make sure wherever you do enter, you got enough room to get out before those lows right there. And this one took off. You could have ridden this one on down. Pulls back again here, but it's so close to the lows now you don't want to fool with it. And once it breaks lower, you don't want to fool with that. But here we got almost a perfect reversal here of what we had. Look how far away we are from the EMA. Look at that nice bullish reversal bar. Go long there. And the reason I really like these trades, they're a little bit aggressive, but I hate to pass these because if you caught this one, you caught the high of the day, and you would have had a runner. You can ride that all the way down. You catch this one, guess what? You catch the low of the day, and you can ride it all the way back up, and you catch a runner. So these are really great trades. Some of them are going to fail occasionally, but I think that if you know what you're doing, you can pick them out. The ones that are right, you know, just one of these can make up for a dozen wrong ones. And if you're reading it properly, you're probably not going to have a dozen. A good example is this one. This one looks close to this. That's still a very bullish bar, even though it doesn't have it just closed. But the problem here is this one opened here, traded down, and closed there, where this one opened down and closed up. So it's a little bit different. But this is still a bullish reversal type bar. And if you go along there, you get stopped out. So that shows you that it can be a little dangerous. You really need to know what you're doing, and because it was a failed break lower right here, and it's still a good ways from the EMA, but it's not as far as it is from here. So then you bounce, you get a second entry long right here. Notice the new high. Look how it pushes through the EMA reversal pattern. Pull back first entry, then you pull back second entry long right there. And I like adding on here. It's not a very good signal bar, so I only made it light green. It's a little aggressive because it's not a great signal bar, and it's fairly close to those highs. But this is back in the range. It's a reversal pattern. We're probably going higher. Hopefully you may be going all the way to the highs here. So, but I like adding on there if you want to be aggressive. If not, you need a little better signal bar. But guess what? It pulls back and it tests that area again. Gives you a nice reversal pattern. I like going long there. But it rockets off, but again, it pulls right back and it tests this area again. Again, the only reason this one is not blue is because, again, it's a huge bar and there's a lot of risk in it. And if you let it break higher and try to put a limit order down here, it never comes back. You could have gotten filled right at the high of that one. Even a tick in, you probably don't get filled. But it's a good trade. If this bar, the red one, would have been a bullish bar, I'd have said go long there. And if this one would have been smaller, or if it would have broke lower and then turned and went out the other side, I probably would have said go long there. But the fact that this is really your signal bar and it's so big, it's just really hard to get in. So that's why it's green. So, and really you just it's just too much sideways, that close to 2 o'clock. Again, though, just remember on range days, the key is selling the highs and buying the lows. And if you did that, selling the highs, buying the lows. This is just a smaller range within. Buying all of those. If you sold any of these highs, you probably made money. If you bought any of these lows, except for this one on this failed break, you made money. So just remember that. That's the key to these. I like these kind of days. They're so predictable. And really, you could have sold these highs here, but I don't recommend them because it's looking like it's trying to reverse, and I think you're taking a chance selling those. And it's obvious, by the time we bounce here, that as we go higher, it's a two-tier channel. You really don't know that until this point. And when you pull it up, you can put it there, and that ends up confirming it the rest of the way up. So, but yeah, I apologize that I had to rush through this, but I just don't have time to go through and like I did. I had a 25-minute video, and but I'm going to close this one up, add this to what was already there. That did have some audio on it, which wasn't much at all, and I'm hoping I got audio this time. But again, I don't know what happened. I apologize. But we'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.